We
Sure.
bought Bitcoin the night of the election. Okay. It's not $68,000 anymore.
Not a bad
That's
move.
A lot, right?
Yeah,
That's a
not a
big
bad
move. That's a big move since November. And
Yeah,
so,
sure.
and there are other, I mean, XRP's up 5 times that much. Dogecoin's up 3 times that much. So there have been massive moves in anticipation of all the good stuff. I think humans are going to human. I think we'll push prices too high. So I don't think we've topped. I think, my own personal opinion is 150 to 180K Bitcoin, and you can do the math or anything else, is the top of this cycle. And that would be about 1.5 times fair value.
On Monday, President Donald Trump introduced several key initiatives aimed at reshaping the cryptocurrency landscape in the United States, with significant implications for crypto asset prices in 2025 and beyond. On January 23, 2025, Trump signed an executive order titled Strengthening American Leadership in Digital Financial Technology. This order establishes a working group tasked with proposing new regulations for digital assets and exploring the creation of a national cryptocurrency stockpile. The group, led by White House AI and cryptocurrency czar David Sachs, includes leaders from the Department of the Treasury, the Department of Justice, and the SEC. They are required to deliver a comprehensive report with regulatory and legislative proposals within 180 days. The same executive order explicitly bans the creation of a U.S. central bank digital currency, reinforcing Trump's stance against CBDCs and emphasizing his support for decentralized cryptocurrencies and stablecoins. To further bolster his pro-crypto stance, Trump has appointed several crypto-friendly figures to key positions within his administration. Notably, David Sachs has been named the White House AI and cryptocurrency czar, tasked with developing a legal framework for the crypto industry. Additionally, Paul Atkins, known for his crypto-positive views, has been nominated to lead the SEC. Mark Ueda, appointed as SEC acting chair, has already repealed the controversial Staff Accounting Bulletin 121, which had prohibited banks from offering crypto asset custody services to their customers. In a recent interview, Mark Yusko, founder, CIO, and managing partner of Morgan Creek Capital, discussed the potential impact of these developments on crypto asset prices. Yusko believes these changes will drive crypto prices higher in 2025 and beyond, with Bitcoin in particular seeing significant gains. He is especially bullish on Bitcoin, predicting it could climb as high as $180,000 before the current market cycle ends. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Yeah, look, I've talked a lot about this lately, and in that, none of us really know whether he has that power through executive order to establish any sort of strategic reserve of any asset. So it appears, and again, I'm not an expert on this, but it appears that it has to come through Congress.
Okay.
There are specific bills in front of different groups, one led by Senator Lummis and another led by, I can't remember the name of the senator, that are moving toward trying to create this strategic Bitcoin reserve.
Yeah.
Now, those are specific to Bitcoin. They have nothing to do with any other tokens. There's been talk about Trump making US-based crypto. Now we're talking cryptocurrencies, not Bitcoin. Bitcoin is a cryptocurrency, but let's differentiate. Cryptocurrencies that are US-based, make gains on those tax-free. And of course, all the Hedera and the XRP and the Cardano people were, oh, that's going to be great. And it could be great, but why would he do an executive order like that? Why would he, and again, I don't even know if that's in his purview, but why would he push for that regulation? Well, if he and his family have suddenly started to acquire crypto assets, it's logical, maybe not ethical or moral, but it's logical that then he would be in support of making those things more profitable. Is it true that the Cardano crowd, the XRP crowd, leadership, meaning the people who own most of those tokens, have been lobbying really hard on Washington, not just Trump, but the previous administration, to get favorable positions. The XRP people want the banking system to use it as a base layer, like to replace SWIFT. Is there a world where you could see enough, lobbying being done that gets proposed by? Sure, I could see that. I don't like it personally because I don't think it's decentralized. I don't think it's the right answer. To me, Bitcoin is the base layer, and then we build everything on top of that is a better solution. But again, long-winded way of saying, I think there's a lot of things happening. I think very little will be done by executive order. It has to go through the proper channels, but that doesn't stop the speculation. Historically, we as a firm have favored the larger, more established protocols. We own a lot of Bitcoin. We own a little tiny bit of Ethereum. We own a fair amount of Solana, although we sold most of that historically. We don't own XRP. We don't own Cardano. We don't own Hedera. That doesn't have any information content other than the fact that when we talk to founding groups, we have not met very many founding groups that are working on those platforms. If suddenly somebody were to say, yes, XRP is going to replace SWIFT and Bank of America is going to use it and JP Morgan is going to use it, if, and that's capital I, capital F, if I can see a way that some of the revenue that would be saved by using a better, faster, cheaper solution could accrue to token holders, then I want to own that. The problem with most of these utility tokens, as you know, Paul, is they don't get any of the cash flows, right? The whole ICO was all about speculation without equity ownership, a claim on cash flows, or debt. I'm an old-fashioned investment guy. I like to own cash flows. I like to own things that accrue value. If we have other token networks that become usable on a global scale, and somehow the cash flow accrues to token holders. So there's no question that any change in the rules, whether it's accounting rules, which would allow banks to hold these assets that under current accounting laws, if a bank owns this asset, it hurts their capital base. And that's true of risk assets. That's why they don't do a lot of private investments or venture capital, because there are accounting rules that, mark-to-market rules that, so if they change those rules or make certain assets acceptable as depository investments like cash or other, then clearly that would change the supply and demand. If we are trading an asset, banks are simply trading, that is really no different than Coinbase or Kraken or Gemini trading, right? It's just a transaction business and you're taking a spread. So would profit be made? Sure. And would the value of a bank go up if they could, arb the spread on crypto? Sure. One of the challenges of all of this is who's going to make the rules, who's going to decide which of these proposals we follow. Is it going to be like the bad old days where he or she who pays the most to lobbyists gets what they want, versus, hey, let's evaluate all the technologies. Let's look at the world like a business. And so if we actually did that with evaluating the technology of Web3 and blockchains, and we integrated that into the financial services system rather than a pay-to-play, bravo, that would be great.
The repeal of SAB 121 marks a transformative moment for the cryptocurrency industry by removing the restrictions and accounting guidance that were previously imposed. With these barriers now lifted, banks and traditional financial institutions have the regulatory clarity needed to fully embrace crypto services. This change dismantles significant obstacles that had hindered institutional involvement in the crypto market, allowing established financial entities to offer services like custody, trading, and payment solutions for digital assets. The path to mainstream adoption is clearer than ever, as banks can now provide secure, regulated access to cryptocurrencies, lowering the entry barriers for both retail and institutional investors. As a result, individuals and organizations that once hesitated to engage with the complexities and risks of decentralized platforms now have a trusted and familiar gateway through their financial institutions. Retail investors, too, will benefit from simplified access to cryptocurrencies via banking apps and integrated financial products, driving broader public adoption. During his interview, Yusko also discussed the topic of real-world asset tokenization, which remains a somewhat controversial issue in both the crypto and broader asset space. However, Yusko believes that tokenization is inevitable, with the potential to reshape how real-world assets are traded and managed in the digital age.
I've said, let's tokenize the world since 2018.
Yeah.
I've been working on this actively as my career since then. And the idea that, and I've said it, and he's not quoting me, but he actually has probably seen the clip where I say every stock, every bond, every currency, every commodity, every piece of real estate, every piece of art, every collectible car, every case of fine wine, every private business, all 700 trillion with a T, 700 trillion, all of it will eventually someday be a token. And a token is not a little piece of gold, or, they always make it a gold coin. Like there's no gold and there's no coins. A token is a line item on a ledger. And why does that matter? We have ledgers, we have databases. Well, no, we have centralized databases that are controlled by certain parties. With a T, 7 trillion every year is extracted from you and me and everybody else in fees to the current banking system and brokerage system to ensure trust, right? I have stock at UBS, right? I have a family harmony account with my brother-in-law. Today, there are paper stock certificates in a file cabinet in Dallas, Texas at DTCC, and they're in the name of UBS. They're not in the name of Mark Yusko.
Mm-hmm.
And I have to ask permission to UBS to sell those stock certificates to you, and they take them out of the file drawer and move them to your file drawer at Merrill Lynch, not in your name, but in Merrill Lynch's name. And the banks, the brokers are gonna fight it. Why? Because that 7 trillion that I want us to reclaim happens to be their revenue. TradFi, CFI, centralized, DeFi. Ultimately, everything's DeFi. The whole world is decentralized and tokenized.
Yeah.
But it's not going to happen overnight. So, did he make a lot of money, like personally, when all the security details stayed at his resorts when he would go golfing?
Yeah.
Yes.
Of course.
Should that have been right? I don't know. But Portnoy says something else different, which is, I could do this. I'm popular. Sure. People know who Dave is. But just because I know who Dave is, I'm not buying Dave coin. I'm just not. I have no interest in it. And some people would.
Not buying Dave
would.
coin.
And the people who, if he did it, and I loved the dilemma he was having, which is the reason you can create this illusion, and I call it an illusion of wealth, is if you do what's called a free and fair launch, which means you distribute all the tokens equally to members of some community, then it really is only going to increase in value on normal supply and demand.
Yeah, that's the market conditions for sure.
If one party owns the majority of the coins,
right,
and a limited amount of float exists, that supply demand gets thrown out of whack. And then what happens is the big institution occasionally feeds the ducks. But just holding an asset that you own the majority of, that's not illegal.
On Monday, January 20th, 2025, President Trump announced the launch of a cryptocurrency called Trumpcoin, branded as a token for his political supporters and backers. The coin quickly gained massive attention, with its value surging rapidly within days of its debut. Within 48 hours, Trumpcoin saw an incredible price increase of over 700%, briefly surpassing the market caps of several established altcoins. Social media platforms were flooded with discussions, ranging from enthusiastic endorsements to skeptical critique. The trading frenzy was largely driven by retail investors, many of whom were attracted by the celebrity association and speculative hype. Crypto exchanges that listed Trumpcoin reported surges in liquidity and record-breaking new user sign-up. Despite its initial success, the launch of Trumpcoin has raised significant concerns within the cryptocurrency community and among financial analysts. The dramatic price movements have sparked fears of a speculative bubble. Critics argue that Trumpcoin's branding and political affiliations could tarnish the credibility of the broader cryptocurrency market. Regulators have already signaled potential investigations to determine whether the launch complies with securities laws, and a regulatory crackdown on Trumpcoin could affect other cryptocurrencies as well. Additionally, some critics worry that the success of meme coins like Trumpcoin could lead to a flood of celebrity-backed tokens, diluting the market and making it harder for genuinely innovative projects to gain traction. There are also concerns that such tokens might confuse new investors and erode overall market confidence. Do you share these concerns about Trumpcoin? Please leave your thoughts and comments on Mark Yusko's interview in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.